Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is May the 3rd, 2023. It is now 3:20 p.m. Central Time. Got about 40 minutes left in the bond market trading day and the mortgage-backed securities. So, big day today with the Federal Reserve coming out and announcing that they are going to increase, or they did increase, the federal funds rate by another 0.25%. Now, this was, widely anticipated. We expected this to happen, but the important part we've been talking about for the last few days is what they say after that, or how they answer the questions that they're going to get during the press interview after the announcement of the federal funds rate increase, which did happen today. And in general, the comments did lean toward believing that this is expected to be, this is how they kind of talk, the last increase to the federal funds rate, which would be great because that means as we've seen inflation go up and now start to come back down, we saw the federal funds rate go up to cause that slowdown in inflation. And then, of course, we have to see it level off before it can come back down as well. So we are expecting the federal funds rate to stay where it is for a number of months, maybe into 2024, before we start to see them bring the federal funds rate back down, because they're really going to want to see the personal consumption expenditures report, the consumer price index report, and other reports show that inflation is convincingly coming down and stabilizing, so that if they do bring the federal funds rate down, it won't start it right back up again and kickstart inflation. So that's something that they've been afraid of for many, many times. Now, so far, it looks like they have a handle on inflation. Again, we don't know if the federal government comes out and releases another couple $1 trillion out into the economy, what's going to happen with other parts of the economy, the geopolitical issues. All of these things weigh into our economy. But from a monetary perspective, they're doing what they need to do, and it is working. Let's take a look and see where our mortgage-backed securities are for the day. Having a good day here. Looks like we are, let me jump in over here. We are currently up 38 basis points, which is a very good day. It definitely could have been the other way around if there were some other types of comments from Jerome Powell and the Federal Reserve. Down 10 basis points on the 10-year, I'm sorry, 6 basis points on the 10-year treasury. But look where we are, 3.36. We're now convincingly away from, not just under, but away from that 3.5%, which is great to see as well. We are now sitting on top of the 200-day moving average, which is what we have been trying to do for 18 months. 18 months we've been trying to get on top of the 200-day moving average, which we now are. So now we need to convincingly stay above this and start to create some more floors of support under us by dragging up some of these other averages, like the 25-day especially, to where this is now above the 200-day moving average as well. And again, you'll start to see that 200-day moving average that's been going like this for 18 months start to level off and start to go back up, which is what we want to see, because we want this chart to show these numbers going up. This is an inverse chart. When this goes up, home loan interest rates go down. Let's take a quick look at the 10-year treasury, then we'll pull up the rates as of today. 10-year treasury. Okay, you can see that we want this one to go down. We want to show the 10-year treasury chart, because this is a yield chart. We want to show this going down. Now, we are definitely below this Fibonacci level that we were sitting at. We're below this level that we were at here. And the next level of support, really, I guess this is more of a resistance line, is 3.3% here. So we, don't have too far to go before we be up against that number as well. So in general, guys, a good day for home loan interest rates, things moving in the right direction. But let's take a look now and look at the rates, the actual rates banks are putting out, because once again, they don't have to pass on all of this improvement. They can leave their rates alone, maybe because they have some fear, maybe they don't know what's going to happen tomorrow, maybe they want to wait until the knee-jerk reaction is over and see where things level off in the coming days. But they don't have to give us the profits that we should be experiencing today after that great run on our mortgage-backed security. So let's take a look. Let's go over here, look at our Brent Bruce Daily scenario, which is our very well qualified 30-year fixed conventional, 800 FICO score, 25% down. Make sure while I'm pulling this up that you like, subscribe, share, and hit the notifications bubble up in the notifications bell up in the corner. because that is how you're going to know whenever I put these reports out and keep you posted. Currently sitting at 6.5% with $846 in credit here with United Wholesale. Flagstar's about the same. 11 Mortgage about the same. PRMG starting to get into cost. So right now, United Wholesale Mortgage is leading the charge. And we are currently again at $846 in credit at 6.5%, 5.999, costing 0.614. Now remember, we were at like 1.7 not long ago. Then we came down to about 0.8 yesterday. Now we're at 0.6. 5.875 is just over 1 point right now. So let's make sure we take a look and see what are the parameters that I'm talking about here. 800 FICO score, 25% down, primary residence, single family residence. So tomorrow, what we want to see is whether these gains hold. Okay, we don't even really need to see big gains. Maybe we could see a small green number like a 5 or a 10, a single digit, but we just don't want to see it tick down red and pull us back below the 200-day moving average, because all of a sudden that continues to be a ceiling. This is the opportunity that we've been talking about to get above the 200-day moving average and stay above it and create a very strong floor of support under us as we ride interest rates back down as mortgage-backed securities go up. That is how this works. If you don't know what I'm talking about, go back and watch some of the videos here that we do on the Brent Bruce Daily to educate on how these charts all work. Let me know if you agree. Let me know what you think. But overall, this has been a great day, good thing that happened. And hopefully this is now the real turning point to where we're going to start to see home loan interest rates get back into the fives, stay convincingly in the fives, and begin to bounce on the high fours here through the next couple of months. Let me know your thoughts. Make sure you like, subscribe, and share. We'll see you again tomorrow.